Are you tired of paying too much for your homeowner's insurance? Do you even understand how homeowner's insurance is rated? Well, in today's video, we're going to touch on 5 different things that make up the rating variables that you can use in order to save money on your homeowner's insurance today. Let's get after it. Hey folks, Jack Wingate here, and on this channel, we give you tips, tricks, and strategies to help you save money on your insurance, help you understand your insurance a little bit better, and let you know what's going on in the insurance industry. Homeowners insurance rates have been on the rise over the last decade, really. But what we're seeing now is that those rate increases are continually increasing at an even more frantic pace. There are a number of reasons why. Most of it involves claims frequency across the nation. And we actually did a video that we'll link up here that talks about why your insurance rates are going up. But none of that means anything if you can't use it to your advantage. So today we're going to touch on 5 different things that you need to understand in order to help save money on insurance. And the first thing we want to look at is the type of home that you have. Now, if you're already in your home, there's not much you can do. You just can't go out and buy another house just to save a little money on insurance. But if you're looking for a new house, maybe some of these things can help when you make that selection. And for those of you who are in your house, let's say you're stuck in your house, well, these are some things to think about that you can get with your insurance carrier to help drive those costs down. So when it comes to rating of your homeowner's insurance, the number one thing that drives cost is the actual home itself. And I think it's pretty reasonable to expect that the higher amount of coverage you have, the more expensive something will be. So if I have $1 million home, it should be more expensive than a $100,000 home, all things being equal. But take that aside, the other factors come with location, where the house is located. Are you close to a fire department? Is your environment crime riddled? If it is, that the insurance is going to be higher there than it is if it was in the place that wasn't so crime riddled. So location matters, just like all real estate things. Location, it matters. The next thing when it comes to the type of home, your home in general, is the year it was built. The newer a house is, the less your premium will be. So if you have a brand new house, your insurance rates will be less than if you had that same looking house. All the other components are the same, and it was built in 1940. The reason being, the construction these days is better than it was, back then. That might be able to be argued that things aren't built like they are in the old days with less, however that works out. But in general, if you have a new house, it will be less expensive than an old house. You have more technology that's employed for fire protection, for smart home type stuff in newer homes than you will with older homes. So year built does matter. The other thing is the type of construction. If you have a wood frame house, which is most houses, that means that they've built it, they've put wooden studs in, they've put vinyl siding on the outside. That is one type of construction. And it actually carries a higher rate than if it was a brick house, meaning we've bricked it, we've had the studs, and we put brick on it. And the reason being, a brick house is going to take longer typically to burn down than a frame house. So the type of construction matters as well. Now, if you're already in your house, there's not a lot you can do when it comes to those things, right? But what you can handle and where you can make up some premium savings is by making sure that your house is updated properly. So if your roof is getting older, it might be time to think about getting a new roof, because one of the largest things that insurance carriers pay claims on are roofs. And there's a industry shift going on to even how they're going to cover roofs as we move into the future, because so many people are filing roof claims. So if you come to an insurance carrier and you give them all the information and they see that your roof is 20 years old or 25 years old, 30 years old, then your rates, if you can get coverage, are going to be higher than if your roof is newer, 0 to 5 years old. So let's make sure that our roof is in good condition. The other thing you can do, really simple, is to make sure that you have an alarm system. Now, back in the day, you had to spend a lot of money to have someone come in and wire up your alarm system. But today, with the technology the way it is, you can actually get wireless alarms and put them in your house. Just make sure that they're monitored, and you can get a little bit of a discount on your homeowner's insurance. All right. So the second rating factor that I believe the insurance carriers look at is you, and that is your propensity to file claims. We internally always get questions about should I file a claim or not? And most people have gotten to a point with insurance where they feel like it's a maintenance program. So we'll get a phone call and says, "Hey, this happened at our house. I want to file a claim." And my next question is, well, how much damage is it? And let's say it's $2,000, $3,000, a nominal amount. I'm going to advise that person not to file a claim because of the repercussions after. In fact, the way you should use your homeowner's insurance is for big stuff. Because if you look at it that way, if you look at it how insurance was meant to be taken as a catastrophic coverage, then you will not be dinged by the insurance carrier. Because insurance carriers understand you're going to have a claim. You might have one claim. There's some people that have 0 claims ever, but you have one claim. Okay, you have 2 claims. Insurance carriers are going to look at you like you're pretty ugly. You have 3 claims, then the likelihood of you getting insurance for your home with a standard carrier, with a good carrier, is getting slim to none. So let's make sure that you only file claims if you really have to. And when I say really have to, it should hurt for you to call your insurance provider and file a claim. All right, keeping with the fact that you have something to do with your homeowner's insurance rates, the next component is your credit. I know that's a big bugaboo when you start talking about credit, but statistically speaking, the better one's credit score is, the less likely they are to file claims, which in turn makes them a better risk to insurance providers. So when you're looking for homeowners insurance quotes, one of the questions that should be asked is, I need your social security number. I don't know if that was a question as much as it was a statement, but can I have your social security number? And the reason they need that, there's twofold. One, they want to check your claims, and your social security number is tied to the claims you've had with homeowners or any property. And the other is to find your insurance score. Now, insurance scoring is rocket science to me. I have no idea how it's come up with, but I do know that one of the factors is your actual credit, right? So the better your credit, the better your insurance score. And one question we get a lot as a caveat is, if I give you this, is it going to affect my credit? The insurance carriers all tell us that no, it will not. It is actually a soft pull, so it's not like you're applying for credit. So feel free to make sure, to give that social security number. Make sure that it's a reputable company you're giving it to. But in general, once an agent enters social security number into a carrier system, we actually don't even see the social security number anymore. So let's make sure you want to have better rates on your home insurance. Keep your insurance, your credit score higher so you have a better insurance score. All right, so the next lever that we can pull when it comes to home insurance rating is your deductible. Now, when I started in the insurance industry many, many moons ago, the standard deductible had just moved from $250 to $500. And I remember coming into the insurance industry, I still had people who go, well, I don't want a $500 deductible. I want a $250. So we could kind of still do that. $500 though was where you started getting your bigger price breaks. Now, from that time until about right now, the standard deductible has moved from $500 to $1,000. And it's probably been that way over the last 4 or 5 years. So you will see more times than not, someone have $1,000 deductible on their homeowner's insurance. Well, I think we're about to hit a shift in the insurance industry again, and the standard deductible is going to go up. And the reason being is insurance carriers do not want you to file small claims, and you don't want you to file small claims. So if we move from $1,000 deductible to $2,500 deductibles, that premium savings can sometimes be in the 10 to 20% range. The next deductible up after that is $5,000. And I'll be honest with you, everyone's deductible threshold's a little bit different. But I tell people when choosing a deductible, it needs to hurt a little bit for you to pay that. So you want to set that deductible at a rate where you know you can come up with it, but it wouldn't feel good to you to do it, because that's going to keep you from filing those small claims. And you're going to save some money. So if you went from $1,000 to $2,500, like I said, you're probably looking 10 to 20%. If you go from 1,000 to 5,000, that's 25 to 30% with most carriers. So today, go and look at your homeowner's declaration page. It's the page that shows all your coverages. And if your deductible shows less than $1,000, then I want you to stop, call your agent right now and say, hey, I want to increase my deductible to at least 1,000, but have them go ahead and tell you what 2,500 and 5,000 is as well. Okay, so the first 4 ways that we can look at homeowners insurance savings on rates, pretty standard. We looked at the type of house. We've looked at not filing claims. We've looked at your credit. And then we've looked at your deductible. And the final one maybe is the most controversial one. I don't even know if I said that right. But it's bundling your insurance. And we did a whole video on this about bundling insurance. Is it a scam or not? But folks, let me tell you, when it comes to homeowners insurance, one of the largest discounts you can get with a reputable company is bundling your auto insurance with your home insurance. That savings is huge, especially now in the environment we're in. You want to make sure you can have as many policies as you can with one insurance carrier. So that means putting your auto insurance with the same carrier, putting your umbrella insurance with the same carrier. If you need life insurance, which most people need life insurance, or most people are underinsured when it comes to their life insurance, try to see if that company that you have your auto and home and umbrella with also provide life insurance, because you can get a discount with most of those carriers. So bundling your insurance is a huge savings when it comes to your homeowner's insurance. Okay, so after all of this video, you've learned about how the location, the construction, the year build of your home drives insurance rates. You now know that the claims that you have filed in the past or that you might file in the future affect your rates. We've looked at how credit, and the better the credit you are, affects your rates. The deductible we choose affects your rates. And finally, bundling of insurance can affect your rates. Hopefully, you can go out today and put this knowledge to use and save a little money on your homeowner's insurance. Until next time, we'll see you.